Welcome back, everybody. How is your Monday? How are you getting Monday motivation today? If you don't know me, I'm Jeremy Waller. What's good? What's good? Blessings, peace, and one love. We're here on this beautiful day. Well, supposed to be Sunshine State. That's where I moved to, Florida. But it's about some thunder, lightning. So if you hear that in the background, the mic's good. But happy July 4th. It's today's the 6th. How did you spend July 4th? We were just watching the World Cup games. If you know, I'm not American, but I'm a permanent resident in this country. I love where I live, and I moved here since 2019. I'm originally from Dubai, so if you want to watch who I am and know who I am, the video is out. I'm turning 43 in August, and I put it up on my YouTube channel. So this segment of my channel is basically me talking about stocks. I've been an investor since 2015, since I was in Dubai in the stock market, and I make these lives and I go live every day, or try to go every day, about telling you guys, because part of my business day to day, what I do is helping people grow with their brands. If they have issues with moving stock around the world, if they just need a consultant, I'm not going to get too much to do in my primary job, but if you want to know more, that video is out on YouTube. It's on my, you can see it. It's saying about, I'm turning 43, what's the next, right? And know about me, Jeremy Waller. First of all, let's get this out of the way. I'm not a financial certified advisor. I can't tell you what to buy or hold or sell. What I can do is share the experience that I've been doing since 2015 in this market, and how I've navigated into spaces and into rooms to grow wealth. It's really easy. It's not tough. What I can tell you is that I wish I had this information, what I'm about to share with you guys today, when I was in my early days, when I was 18, 19, 20. I mean, we all know today, if you watch CNBC, today was talking about Trump's, with Robinhood, the accounts for, kids who are born in the country. I'm not going to get too much into that, but you know what I'm saying. So investing is great. Let the market do what it needs to do. I'm a sort of person who like to remove all the negative and toxic noise out of my life, so I can focus on me, my narrative, what I'm about, what my family's about. If I have more money, what I can do for them, who can I help who's unfortunate, right? So it's all about the education that I wish I had, because today with AI and everything on hand, we can really move quicker, in my opinion, right? So I'm just trying to open up, give me a sec, guys. I'm trying to open up the stream just to see if anyone's on it. The chat, but this is what I'm trying to say, right? So I want to, if I could speak to a younger Jeremy when he was 18, when he was 19, and tell him, like, the stock market, with time you can compound and make money. If you follow me along on my IG, on my links below, I share my progress on my private portfolio, and I'm like, guys, this is what I'm doing in private, this is what I'm doing in public. If you guys want to learn about it, follow me, my links below. Before you get started, I would suggest, in my opinion, I wish I could go back in time and not like FOMO into stock and buy and lose money and then learn the hard way. I would look at these things. These are the 6 things that I would look at in my point of view, right? So let's just get into it straight away, right? So you guys, we are all on the same page, right? And I want to make this as easy, as user-friendly. Like back then when I started using Nokia phones, they were mad easy, and then we went to Windows phones and iMate. If you know, you know, bro. Like it was a transition. Today's phones are cool, we're all locked in, but it was a journey and a process. So greatness is a process, but we just need to realize, like, with all the AI and the tech and the smartphones and all the information, bro, I grew up in eras dial-up. My mom would pick up the phone, the information that I was looking on or whatever I was watching, if I was streaming online, the gaming online, it's dead because the phone was picked up. So yeah, not showing my age, but yeah, I just shouted out, we're turning 43. So yeah, let's get into it, bro. Wi-Fi's online. Am I too loud? Am I too loud? Is the mic good? Okay. So this is a little presentation I put together. Again, AI, blessings, Gemini, Claude, Canva, bro, plugged in, right? So I'm like, I want to speak to a younger Jeremy Waller who just started investing, or who hasn't started into investing. So I'm like, God, what are you doing, bro? Get into it. Start investing. Compound this stuff. So And later on, I'll show you the public portfolio where we are at today. It's 2 p.m. Eastern time. But let's get into this. So welcome. I'm Jeremy Waller. Thanks for tuning in. You're going to grow wealth, in my opinion, if you follow these things. So we're going to go straight into it. Bang. I wish it would happen that way, but yeah, it did. Give me a sec. Is it this one? There we go, guys. Let me get my circle cam in there. Right. Here we are. Let me just switch that. Okay, awesome. So when I say these are my six, bro. I wish I had known this way before when I got into buying stocks, but I didn't. How did I learn this? I learned it by the hard way, bro. By losing money, making money, losing more losses than making money back then. But these are the fundamentals that I tell people today. Like, guys, if you're going into anything, like, don't FOMO in. Don't just follow the hype. Don't just like, oh, my cousin bought this, so I'm buying it. Because by the time your cousin, your family, your client tells you, your friend, whoever tells you something, by the time you watch on YouTube, it's all. And if you're not paying for stuff, like if you're not in someone's Patreon or WhatsApp or Discord group, you might be aligned, but you might not be aligned because the time has passed, the market's moving, right? So at times, like if you didn't get, for example, right, I'll just tell you this. If you don't know what AMD is, right now, put it up in your stock. Every iPhone comes with a stock app, or just put it in Google or what, even Gemini. Like, I got into AMD in the private portfolio for about $110, right? Today, I don't know right now, but early in the morning, AMD was at one stock, $536, right? So that's what I'm saying. Like, timing is key, but also knowing the fundamentals are key, in my opinion, right? So these are the things that I would look at, right? Check the PE ratio, and I'm going to show you how to check this PE ratio on Robinhood app. I'm not affiliated with Robinhood. Yeah, I just prefer to use it to show people because it's mad easy. It's like the Nokia's phones back in the day. Mad easy, user friendly if you use it the right way. If you want to use other apps like Moomoo, Coinbase, I have my referrals below. If you click on it, I get something, you get something. So we're all winning, bro. But these are things. So I'm going to show you in how in Robinhood the PE ratio looks before buying a company. If you're overpaying, if you know what is PEG ratio, usually this you can look online and see where the company is going, what the brand is doing, etc., etc. Is this a growth play or stability play for my portfolio? So when you're building a portfolio, you want to make sure that you have to understand what your DNA is. Are you safe? Are you aggressive? Are you young? If you're young, you would be slightly aggressive and building growth plays and being in the AI sector. If you just get into investing, if you're 40s, 50s, 40s, you still have time like me. But if you're 50 and 60 and you're getting there, you can build a safer portfolio, and probably like 10% of growth and aggressive stocks, right? So we'll get into that. I'll show you that literally at the end of this presentation on this same stream with my public portfolio on Robinhood. Do I understand what this company actually does? A lot of us people with FOMOing, we get into plays and we don't know what this brand or the company is doing, right? Oh, it's AI, but how many of this is AI? Why if we say it sounds good? Thanks for letting us know. And if you don't follow the wifey, bro, she's starting a new journey into wellness, right? She's certified in a lot of these wellness aspects like facial yoga, sound healing, and so many other things. Yeah, look at her, bro. She just started a channel as well. So do I understand this company exactly? Am I okay holding this for 3 to 5 years? Now, when I say, in my opinion, holding for 3 to 5 years, you can review these plays, these stocks, your investments every 6 months, 7 months. But you can't like, I'm burning money, I'm selling out, right? Me, as a long-term investor, I've done all the other stuff. I've done it. Option trading, if you're making money, great, right? I don't like to look at these as short wins. And I'm not saying what's right or wrong. This is just my way, Jeremy Waller's way of making money. I'm a long-term investor, right? I have a primary job. I have 3 jobs, to be honest. I'm in different streams of income. But when I do a long-term investment, because I've done these other things, this works for me. Now, I can't tell you what works for you. You can just take this piece of advice, go and implement it with another piece of advice, your advice or whatever, but you got to know what you want to do, right? As well, your end result, your end goal, because we only have so much of effort, energy, bandwidth to carry, right? So I like to buy companies that I know of. I know their DNA. I've seen it since my journey since 2015 of investing, right? And I want to know what fits in my ecosystem, right? Now I don't trade with my heart, so I'm not emotionally attached. I trade with the charts. So what is it 3 to 5 years? Because I look at all my stocks that I invest, because I'm an investor, a shareholder of these companies, as businesses. I used to help businesses and assist businesses even till today. I help them with their P&Ls, what to grow, if they're stuck with stock, where to clear the stock. I handle all this for them, and I'm not getting too much into that. That's my primary job. But as a beginner, you want to know these things. Now you look at your portfolio as a business. If it's not performing, it's been a year, it's been 2 years, you know about this company, what are you going to do? Are you going to get out? Are you going to get in? Are you going to accumulate more stock? Are you not? So that's what that means. Would I buy more if it dropped 20%? All depends on the thing I just discussed. If you're in it and you understand this company and you do your DD, which is your due diligence, you can make stuff happen, right? Let's get into it straight away. What you should know before buying any stock. Again, I'm not a financial certified advisor. I'm just sharing what I could tell a younger version of me. Like I said, I didn't have all these tools. I didn't have the information. We've been having it. I've been buying mad stocks, accumulating. I'm in this project of accumulating the right companies for my portfolio during the pandemic. That was the scariest time. And I'm like, I miss certain scary moments in my life in terms of building wealth into stock. And now I got the opportunity, so I'm building. So what you should buy of any stock? Why start now? Like I said, time is your biggest factor. If you've got time and you're young, bro, start. You can start with $50. You can start with $10, $15, $20, $1. You can buy fractional shares. When I started investing in Dubai, I couldn't have fractional shares. I had to buy one share. So if the company costed $100, I had to buy $100. Today we can buy a company which is costing $1,000, and we can buy $1 of this company and keep on going, right? Or more. And I'll show you which companies. The public portfolio that I have in Robinhood and I share online with you guys in this segment of my channel is basically trying to tell you guys, bro, like, you can do it. I wish Jeremy Waller at 18 did it. You know what I'm saying? So, and it cumulative, bro. Time is your biggest. Mistakes now cost less than at 40. Now, what this means, it could go both ways, right? What I want to say, what this means is, like, when you're younger, you can make more mistakes. Do you want to make more mistakes? 100% not. But you have time to fix the mistakes. When you get older, like me, that's why I do so much research now when it comes to buying and investing my money, because I've worked hard in my life and I'm still working hard to create generational wealth, right? For my last name to be an asset, so I can help others who don't know but want to get navigated in this space, and they want to help others and businesses and etc. Right? So this all depends and how you intake it in your ecosystem. Like I said, compound growth is magic, and that's why it's written twice. Compound growth is magic. The more money you put in, and over time you keep on DCA, dollar cost average, you'll get there. You'll get to that millionaire, multi-millionaire, whatever you want to be. But you got to start now. If you're young and you're watching this, bro, start. All you need is social security number if you're in this part of the world, North America. If you're in another part of the world, for example, Dubai, where I'm from, I've helped people open up accounts in Dubai, mad easy. Get in touch with me, comment, DM, let me know, and I'll help you. I've helped my brother, I've helped my cousins, I've helped families, clients out there with what platforms and everything. So I'm not getting too much into it, but let me know, bro. So what is the PE ratio? Where will I look at this? So after this presentation, like I told you, I will show you in the Robinhood app where you look at these things. But let's get into it. So I like shoes, so I'm like talking to a version who was 18, 19, JW, he loves shoes. He loves sneakers. He's like, bro, I want these things, right? So think of it like this, right? Sneakers. So a high price to earnings, you're paying high price for Jordans at 3x retail. So when it's high, when the PE is high, what is a high? This thing. So anything 40 and above for me is a high price earning. That's for me, right? You can obviously put this into whatever chat bot you use and find out how you want to speak to you. This presentation is talking to people like who are beginners, right? So you're paying a high price like resale Jordan 3x retail. What is a low PE? So anything between below 20, sometimes around 20, 10 to 15. So you have to understand the company, the fundamentals. That's a low PE in my opinion. You're getting closer to fair value of that company, like copying at retail or below. So imagine like this Travis Scott shoe is hot. Everybody wanted it. Blah blah blah. He released it for World Cup. World Cup's done. It came out for what? What does Jordan go for now? 160, I think, all in. 160 low Jordans, A1s. Travis Scott version came out 160. Some people cop, some people didn't cop, and now it's like at when it was a World Cup, it was like some were reselling for $2,000, some absurd amounts of money, and today because the World Cup's done, bro, it's like $100. You see what I'm saying? So that's a low PE, but you know the value. So just because the price tank doesn't mean, and it's below retail, doesn't mean that price of the shoe, the value is gone. But it's Travis Scott. Will it go up in the future? That's how you go. But you're getting it for a fair value or below, right? So neither is automatically good or bad. It depends on why. So sometimes you can get into a great company that a high PE is like 50, 60, 100, right? Obviously, it's quite absurd when it's 100, but I've been in some place that it's hit that much and I still kept on adding and it just went bonkers high, right? So it's all about understanding what you're buying, where the hype versus value is, right? So neither is automatically good or bad. It depends on why the price is where it is. And that's what I'm saying. Sometimes it just balloons up, skyrockets up, like SpaceX. But the fundamentals of SpaceX, that the company is, brilliant example. SpaceX came out 135, shot up to $210, $220, dropped down again, but the company isn't even providing any, they're not in profit, right? They're not in profit, and you can look this up, right? Will it be in profit and revenue and everything in the future? 100%. But a beginner person should look at these things just because you're putting money in it. Don't go in FOMO and hype. Know these things. That's why I'm trying to put this video out, right? Next. So let's get into more what PE ratio and the action is. So like I was saying, high PE is like 40 plus, right? Market expects big future growth. So like I said, SpaceX, beautiful example, right? Right now it's crazy. We'll look into SpaceX after this presentation because the public account got one share of it. You're paying a premium for potential. Exactly. Example, Tesla, Nvidia, and growth phases, right? So if you look at these companies back in the day or even now, I don't think Nvidia as much, but if you looked at these companies back in the day, like maybe 2, 3, 4 years as well, that their PE ratio is pretty ridiculous, right? These are just examples, right? Do your own DD, your own due diligence and stuff. It's great for you to do your homework, to know about where your money is going and how you're investing as well, right? Risk. If growth slows, price drops out 100%. So we all understand this. Low PE, 10 to 50. Now, it could be undervalued or declining. You're paying less per dollar of earnings. Example, banks, utilities, matured companies. Like when I open up the public portfolio right now with you guys, you'll see like Microsoft. I'll pinpoint Microsoft and we'll look at the PE of that great company. Risk, cheap for a reason. Do your research. Exactly. Do your research. Okay. Now, what is the PEG ratio, price to growth, right? So PEG adds growth into the equation. It tells you if a stock's PE is justified. We just know what PE is right now. If it's justified by how fast the company is actually growing. PEG, price to earning ratio, divided by earnings growth rate, right? So you kind of get it. My go-to for comparing growth stocks. So here you go. PEG equals potentially undervalued, growth outpacing the price you pay. PEG equals 1, fairly valued, price matches the growth rate. PEG 1 equals potentially overvalued, you're overpaying relative to growth. This is my to go for comparing growth stocks against each other. Now, if that sounded like a mouthful, that's because I just went with it. But I'll explain to you what it is. Now, for example, now the price to growth. So you can obviously type this in as well on any chatbot you use and see what is the PEG ratio of Meta. What is the PEG ratio of SpaceX? What is the PEG of Nvidia? And so on, Amazon and so on, right? The main thing that you want to look at is first the price to earning. After you look at that, you can look at the PEG ratio as a gauge, as a indicator, because this is what their growth is. Now, if you use Robinhood, I'll show you like how they show you the growth of companies in the Robinhood app. And you want to also look at these indicators to better where your money is going, right? So if you buy Meta today, they will say, if you bought it like 2 years ago, the company will say, okay, our PEG ratio, because the way we're growing for the last 2 years is this much. We're going to do, if we did 50 billion and then 100 billion, this year we're going to do 200 billion, right? For example, right? These are my opinions and stuff. So that's how it is. The main thing you want to look at P ratio and also be dialed in with PEG to know that, okay, I've been in this company for 3 to 6 months. This is what I'm going to do as well. Look at these things, right? Now, growth versus stability, right? Again, these are all my opinions. I wish I could tell myself this when I was younger, so I would know things, not just hype and FOMO and like, oh, my cousin bought this, so I'm gonna put money in it. No, bro. I wish I did my due diligence, my DD. So growth stocks. Now a portfolio should have stability and growth. Exactly. Like when I was buying back then, I was just buying Meta, Microsoft, this, that, which is great. It turned out great, 100%. But I wish I diversified the portfolio. I wish I had ETFs as well, because when the crash happened, uh, everything tanked. Like today, again, this is me in my private portfolio. I don't have Tesla anymore. I don't have Disney. Did I lose money? Did I make money? Yes and yes, right? Yes and yes. The way I calculate my risk, I majority of the time I make money, right? Overall, as a whole portfolio, right? Most of my plays, let's say if I'm in 10 plays, for example, out of 10, 7 are hitters. They're all green. Some of them in, this is my private portfolio. Some are in triple digits, right? Personally, I'm not here to brag or boast, but that's what I wish I understood all these things, like what sectors to get into. What are the ETFs? Should I trade outside the US market? All these things I wish I knew. So growth stocks, high risk, high reward. Exactly. High risk, high reward. Reinvest profits, volatile, big swings. Best when young. Talking to a younger version of me. Examples, tech, AI, biotech. I mean, the list goes on. Memory, all that is under tech, software, blah, blah, blah. Stability. Low risk, steady returns, pay dividends, passive income, less exciting, more predictable. Portfolio foundation, examples, utility, healthcare, blue chip. Exactly, right? So if you're looking at all this stuff and like, basically you can be in a Johnson & Johnson, for example. You can be in a Coca-Cola. You can be in an ETF. So yeah, and they pay dividends. And make sure that when you do set up any of your stocks in your portfolios, in your apps or whatever you use, make sure that all your dividends that you get from these companies, if you don't know what this means, look it up. That you reinvest your dividends, you put it back in, right? And you can give that command and it keeps on doing this because you're just compounding more. Remember, compounding, right? So again, that's what we just spoke about. We can skip. That's my approach. What stocks are you looking at? That's me. Again, if it's too babyish or children, bro, I just spoke to AI, ran with this, and this is what I'm showing you guys. I didn't even have this when I was growing up, when I was 18 or 19, right? I wish I did. So let's get into the portfolio right now. Give me a sec, guys. Okay. Opening up the portfolio. I hope you guys like that, bro. That was something I put together for you guys before we got on the stream. We made it happen. Just putting it up. So I know if I went too fast, bro, you can just rewind it, dude. Put on captions, put in whatever, right? I'm opening as we speak the public portfolio. And if you are not a beginner and you're watching this and you're like, okay, bro, like, thanks for tuning in as well. Let me know your thoughts in the comments below. So I'm just popping up this. Give me a sec. There we go. That's the time. Let me just put this image slide up. There we go. Okay, good. We're good. So there's 11,404, man. That's mad. We started this account with $1,000. And obviously, we started with 1,000, but we added every now and then to make this amount happen, right? Let me just flip my screen as well because it looks like I'm looking away from you guys. There we go. So 11,404, we're up $131 today. Bang. Again, guys, this is a beginner's portfolio. Don't be hating, don't be trapping. If you have feedback, advice, put in the comments, right? Everyone's got to do what they got to do. I don't have infinite amounts of money. I'm buying what I think I would have bought at when I was 18 if I was getting into the market today. But I love sharing knowledge. I love sharing the food. If it's great food, Share it. Be sitting at the same table to win. I'm in rooms with some people who are 10 million rich, 20 million rich, and then also there's a couple of million rich, right? Some of them are 5,000 years, like 400, 500,000. But we're all sitting at the same table, respect, humble, and making it happen and owning it, right? So remember, we're talking to beginners, right? Buying power 500. So this is, once you open up a Robinhood portfolio, this is what it looks like on your phone. It shows you your investment. These are the charts: 1 day, 1 week, 1 month. So if we look at 3 months, bang, we're up $622 and so on. So let's just keep it as a week. Okay. Now we were talking about the PE ratio, right? So when you look at a company like SoFi, now these are different sectors which are in the public portfolio. This sector is finance sector, which one is a sector that one should be looking at if you're a beginner as well. SoFi. Now we got SoFi when it was $7, bro. $7 in the private portfolio. We've been cooking. So salute to me. And the people who've been sharing the news as well, right? On my Discord and my WhatsApp. We be eating, bro. So right now, before looking at all this, let's look at the PE ratio. There we go. So this PE ratio is 41.37, right? Currently, it's high, in my opinion, right? Is it great to buy? You can have some skin in the game. Just because it's $18 doesn't mean you go and put $100 in it. Understand these things. Know these things. I would say if you can, buy a share and see what happens, right? We can also look at what happens from this aspect, right? If you look at 3 months, okay, if you even, instead of looking at the charts, you could just click into SoFi. Sorry, my bad, I was looking at something else. If you look at 3 months and this is too much info for you, within Robinhood, you can go here and it tells you, right? The 52-week low has been $14.92. We're currently $18. Let me bring the screen a bit down. There we go. We're currently $18. The $14 was the week low, 52-week low, right? Today's high was $19. Today's low has been $18 and some change, right? The 52-week high versus the 52-week low was 32.73. Mad, right? And remember, I got this at 7 point something, right? 7 and some change. I think 7 point like 10 or something. Now, I'm just using SoFi as an example to you guys, right? What is the P ratio? If you look at this, whatever money we have sat here, we've gained almost $40, almost a 10%. Now, you want to understand, I'm a beginner. Bro, I have money in my wallet. I can touch it. I can feel it. I can do what I want. Bro, cool. I had that too, and I still have that. But I want to see 10% off whatever was in my wallet, more than that, 100%. That's how you got to look at things. And compound, right? Compound. Right? I can show you some stock which we're compounding in this portfolio so you understand more. But just know that if this money was sat in my wallet, we didn't make this 39. Oh, as some women put in their bra, no disrespect. Some people put under their bed or whatever in your house, piggy bank. Bro, come on now. It's 2026. We're 7 months in the year. It's almost done, bro. So make your money talk, Make your money, make money while you're sleeping. This is the way, bro. But I want to get into getting off track with all that. But your PE ratio, and you want to know, okay, it's 40. It looks like it's going up. The high was 32. Do you want to you can buy a share. You can buy $10 whatever, $5 whatever. It's mad easy, But get some skin in the game, and then when it dips, you get it, right? So that's how you got to understand the price to earning. Now, if I let me just put into Gemini, since I have Gemini open. Give me a sec. Okay. What's the PEG ratio for a SoFi? Let me just share this with you guys as well. So I put it up. And it's saying the PEG ratio for SoFi. Bro, let me just share this with you guys 1 second. Give me a sec. There we go. So this is what I put up, right? What's the PEG ratio for SoFi? The PEG ratio for SoFi Technologies currently sits right around 0.82 to 1.0, depending on whether you look at trailing metrics of now, like, oh, I'm a beginner, this is too much information. Speak to me exactly. Look at this, bro. You could just say, speak to me like I'm 18. Okay. Look, if you're looking at SoFi at a PE ratio alone, doesn't tell you the whole story because the company is growing fast. That's where the PEG ratio comes in. It literally stands for price to earnings to growth. It just takes the standard PE ratio and divides it by the company's expected growth rate to see if the price tag actually makes sense. Here is the breakdown. The PEG ratio, can you guys see this? Yeah, cool. The PEG ratio is sitting right around 0.82 to 1.03. What that means? In the investing world, a PEG ratio under, bro, why am I, hold on. There you go. What that means, in the investing world, a PEG ratio under 1 is the sweet spot. It means you aren't overpaying because the company's future growth justifies the current growth. So it says under 1. Right now, it's almost there, bro. You see what I'm saying? You aren't overpaying. The math behind it, so SoFi standard PE ratio looks around 37x to 41x of the company, right? But because Wall Street expects this earnings to grow at a massive 38% over the next few years, the growth completely balance out that high price tag. Basically, if you're putting together a growth portfolio, SoFi's numbers show its pricing in a ton of growth, but it's actually backing up with real expected performance. It's a textbook example of using the checklist to make sure hype stock is actually worth the buy. Guys, this is what I'm saying, guys. The information is right there in front of you guys. Pull all the data up that you need to make this stuff happen, bro. It's right there. Okay, let me get. Okay, so where's the. What's happening here, guys? Give me a sec. Okay. So, right. I hope that sheds more clarity. Everything's out there. So, if you need to speak to you the way you need to understand it, you can also ask the chatbot to do that. We're using Gemini here. But, bro, SoFi. So, we have about $416 as we speak. Sooner or later, if it dips, we're buying more. Just so you guys are aware. We are in the stage of accumulating whatever's in the public portfolio. American Express, we don't even have, again, this is a beginner's portfolio. We don't even have one share of this company. Not even one share, and we still up 13%. We made $23, American Express. Dividend is pending, so we're getting money back, 53 cents coming in, and it gets reinvested into the portfolio. So guys, this is what I mean, right? All these little amounts add up as well, right? Like I said, we started about $1,000 in. You saw in 3 months, we are up $627. Only 5% up. That's overall. But if you look at your stocks by itself, you're up. So if you're like trying to, I'm not here to buy and sell. I'm here to accumulate for the long term. 3 years and then review. 5 years, look. And I do take profits every now and then, but I the minimum years I look to take profit is 3 years because of capital gains. You can do it after 2, but yeah. This company, which we are focusing right now on our public portfolio, is Robinhood. We're up 44.22%. If you like that number, start your journey now. You want to have 45%, 44% on your money, on your investment, click the link below, follow, like, subscribe, bro. I do this for free. I'm not charging anyone. The like button is for free. Hit it, bro. Like I said, I'm not a financial certified advisor. I'm just doing this, bro. We can all make money. It's mad easy. Just get into it, right? Robinhood, we have 5.51 shares. Look at that candle. This is called a candle. This is called a rocket, whatever you want to call it, bro. Look at that graph chart, right? 3 months ago, we were here. And if you look up here, the low is 66.62. That's the price that Robinhood was for one share. Today, one share is right now, July 6th, 2026, 2:30 p.m. Eastern Time, is $116. Right? You see what I'm saying? We got in when it was 81 in the public portfolio. So we didn't get that 66. But you know what? We made $197 in this baby account. Bro, that's our value right now. So do your thing, bro. So these are the things you want to look at. So we are in traditional bank, American Express, from the finance sector. We are in a future bank, SoFi, which is basically not your traditional bank anymore because there's no brick and mortar store, there's no retail store, it's purely online. A lot of people, so they've captured like 15 million members and counting. Some of the banks are probably like 50 million, 60 million. So the way that SoFi is growing, they're capturing people. All the new Gen Zs, all the people who are after the Gen Zs, they're all going to trade and invest in a bank with SoFi. You can also download the apps. One of my banks I use besides SoFi is HSBC. That's a really traditional bank. The app sucks in my opinion. I just bank with them because tomorrow if I have to leave and go and live in another country or whatever, it's just mad easy to transition, right? Can I transition with any other bank? 100%. Am I stuck with them? At this point in time, I'm not stuck with them, but that's where my salary goes and X, Y, and Z. But I have other bank accounts, like my Emirates Bank account in Dubai still. I still have a bank account. I still have SoFi as a bank account, and we deal with other American banks as well, right? But you got to do what's best for your money and put it in, because everyone's account is FDIC insured in America up to $250,000. So if you have more than $250,000, again, this is for beginners, but I don't want to overwhelm you guys with these numbers, but you can move around money, and so you're FDIC insured for everything. But work smartly and work on point, you know what I mean? So yeah, you want to look at these sectors. These are all the finance sectors. Even Hood is a finance sector because it's an investing app. You can borrow money against your portfolios. There's so many ways. So all these is a sector, right? The same finance sector, but one's in tech, one's in this. You see what I mean? Then you have ETFs. Then you have these are the ETFs, and these are the percentage. Like I'm not literally going to open up. I've been opening up the portfolio every now and then with you guys, so you can watch my past videos if you want to learn more. But today was more about what you guys should be looking at, the PE ratios, right? And the PE ratios are mainly to do when you look buying individual stocks, because if you buy an ETF, there is indications, but sometimes the indications, show you, like I'll show you this ETF it's a buy. We keep on accumulating. These are all the sectors it's in. You can even click this and Robinhood tells you what. But ETFs are the safest. This follows the S&P 500, so you can buy. We made about 8%, under 9. But let me show you like Microsoft, right? Now this company, we're still in accumulating state. We're below negative $23, just negative. This account has about 1,000 and something in dollars. Their PE ratio is really great. Really great, in my opinion. Really great, right? Look at the amount of employees they have. Where's that detail? I just saw the employees somewhere else. Here, 228,000 employees. Madness, bro. But it has all these Robinhood has all these factors, these analytics. This is what I'm saying. Like guys, don't get overwhelmed with all this. Just look at the top things that we just spoke about. Right? Look at the PE ratio. Great company. You know Microsoft. You use Microsoft. If you're working if you have a work laptop or you have any laptop, Outlook is in it. You know what I'm saying? Just know about these companies. Do you want to be in it right now? That's a question that you need to answer yourself. But I'm teaching you the fundamentals so you know what to look at. I'm not teaching what's right or wrong. I'm literally saying look at these things and make your own judgment. Right? This is my journey. This is my 18-year-old or 19-year-old Jeremy Waller's account. This is how it looks. All right. Now, 95% buy, 5% a hold, 0% sell. Those are the metrics, right? You can see it. Now, Morningstar in Robinhood, you have this as well. So it's basically showing you these guys are like analysts who basically do these auditing or whatever you want to call it. Their company is called Morningstar. This was updated 2 days ago. They're saying fair value for the stock is 600. We're at 386. Understand it? So if they're telling you that it's going to be 600, they have some information that I don't know. But I've been in this play quite some time in the public account. I have this in my private portfolio. We're cooking it. We're in green still with the market being down where it is in terms of Microsoft. We're cooking. We believe in this company. Now, I can't tell you what to buy, hold, or sell. You do your own DD, but we accumulating. You look at the amount of greens to the reds, it shows that your boy is cooking, right? And these were reds, bro. If you look at the earlier video, they were red, but we're accumulating great companies. Like I said, I'm not getting into too many, but I do want to show you the new plays that we're getting into, just so you understand the P ratios, because some of the P ratios is bonkers, right? In my opinion. Now, this is negative 192. Everybody knows Intel. If you don't know Intel, look it up. Not too long ago, if you go year to date, we were at $44. Now, some of the people I know within my circle got Intel at 27. If you know who I'm talking to, that's you. You know me, bro. Shout out to you. You got it. RB, that's the initials, right? So he got it at 27. It's $44, right? Now, we were accumulating in other sectors like AMD, Nvidia, AVGO, Micron, Taiwan Semiconductor, similar sector. We were accumulating in this in the private. Some of these plays are like three-digit percentage up. If not, all of them are, right? Again, I'm not here to brag or bro. So in the baby account, the beginner's portfolio, we put some, just to show you guys, even on some, you can make some. Now, why the P ratios like this? Again, you can put in your A-boy chat bot and ask why is Intel down? You know, let's just do this right now. Okay, I'm not going to share the screen again. I'm just going to tell you. So this is the current P ratio of Intel. Speak to me. Right? So let's break it down what's going on here to see Intel, why it's a negative 192 and some change. So basically, the red flag is they are losing money. Okay, a negative PE ratio means one specific thing, right? The company has negative earnings. In other words, Intel isn't making a profit right now. They are actually losing cash. Since the math for the PE ratio is price dividend by earnings, if that earnings number is a negative, the whole ratio flips. Why is it so? Again, now you know more about it. I don't need to read it. Like if I'm doing you all the homework, you won't get into this, right? Do your homework, do your own DD. I'm going to end with this. Is this a turnaround play? Are they losing money because they are investing billions into new chip factories that will pay off later? What is the risk? Buying a company with a negative PE means you're betting on a future recovery, not buying a stable money maker, right? Basically, a negative PE tells you Intel is a rough spot profit wise and you're buying into a major restructuring story rather than a healthy prediction. Like I said, guys, some of the people I know got into this when it was 27 and they've made money and they're killing, and they've either sold and taken their profits, or they're still in it because they believe that Intel can go all the way up, right? And if you look at in the year to date, it's still going up. You look at 3 months, still up, right? Now, in the last 3 months, it's made 140%. That's what I'm saying. By the time some people actually hear about these stocks, hear about what these companies are doing, they missed it. The FOMO is gone. So you need to be dialed in. You need to put alerts on your apps and everything. Speak to the right people. If you want to make money, it's not easy. You got to put in the work if you want to chase that growth. Otherwise, just put in ETFs, right? So if you look at the 52-week low, it's been $18 and change, and the high was 142 and some change. Now, since the first computer my parents bought me, which was a compact Presario 520 series, I remember that like clockwork. It had an Intel, 1 chip, and then we progressed to Intel 3 chip and premium. So Intel is a company that I believe is going to be here for the long term. It's been founded since 1968. But again, I can't tell you what to buy, hold, or sell. You got to do your own due diligence and see what works for you. This baby account has hardly anything, right? But compounding over time, if it dips more, we're just adding to it, right? And I like to buy stuff in red, right? When it's red, that's how you create growth. Yes, you can keep on accumulating to ETFs or even great companies. You do what's best for you. But when it comes to me, the way I invest money, for Jeremy Waller, I buy stuff when it's in red and I wait. Even if it dips a little, it doesn't have to go all the time red. Like this 15% could go to 10% as an indicator, and we would buy some. You see what I'm saying? Guys, these are the new plays which you can see in the red. We don't have a lot of them, but we're accumulating because we believe in these companies. Some of these companies, right, look them up, NBIS, right? Look at the PE ratio 63, so it's double of 30, right? So that means this NBIS is 63x more expensive as a company to buy. These are things that you want to look at and be in the play. It's good to have some skin in the game. We have nothing. It's $212 a share, right? When it dips more, it's down 10%, that's $3. I wish that could be like more than this, double digits, and when buying some. But these are the things I want you to understand, right? Look at these things, energy sectors, whether it's Bloom Energy, whether it's XE Energy, do your homework, bro. Do your homework. If you want to make money, it's right there. You can, like in my Invest 26 Youth, these are all on my radar, right? We just spoke about XE is here, Bloom is here, everybody's green today. Although in the last 3 months they're still down. So yeah, guys. Year to date 10% up. Oh, that's Chevron, sorry, my bad. This is XE. You see what I'm saying, guys? So I want to leave you with that. Understand what you want to put your money in, what sectors you want. The sectors that you want to look at is AI, tech, right? Software, energy, traditional companies. What is a traditional company? Like, depending on what sector, right? Like something out of the tech bubble, like we are in ELF, right? People are like, it's boring. What are you doing? Put your money, bro. We're up $124. The proof's in the pudding. 28% up. It's ELF. You're telling me that no one needs products? Whatever gender you are, you don't need, to look nice, to beautify yourself, skin, Come on, guys. So this is what I mean. Teach yourself how to have a portfolio. Teach yourself how to be diverse. Teach yourself the right things. Look at the right things, right? Look at the PE ratio. It's 172. It's bonkers. It's bonkers. But health is going to be there. But just know these things. Get into place when you, at the right time, don't FOMO and understand the fundamentals. Get into ETFs if you need memory ETFs. We're cooking with 36% up, Do your thing, bro. On that note, peace, lovings, blessings. Grow your wealth. Invest. Make it happen. No days off, bro. Own it.